We just got some good news on the job opening front and something that the Federal Reserve will want to see. The number of job openings for October from the JOLTS report came in at 8.7 million job openings, less than the 9.3 million estimated, and less than the 9.4 million from the prior month. This shows that the labor market is starting to cool down, and that is something that the Federal Reserve wants to see in terms of the economy slowing down and in their fight against inflation and their rapid rate of interest rate hikes from last year into early this year. It goes to show you that that's working and decreasing demand. The job opening to unemployed persons looking for work ratio is now at 1.3, and that cooled from a peak of about 2 about last year. And then the quits rate is going down back to pre-pandemic levels. And then the hiring rate is going down as well, back closer to pre-pandemic levels. This is good, as I said earlier, for the labor market cooling down. You would think from these numbers itself that the market would react better because honestly, this seemed like a Goldilocks report. But honestly, I think the market was a little bit overbought in the short term. The market was really starting to price in rate cuts into next year, and kind of rightfully so. We're seeing slowing growth as illustrated, especially from this report as well. But I think the market was a little bit too overbought in the short term and pricing in almost too aggressively for those rate cuts, especially with some chances of those rate cuts being in Q1. The market was starting to price that in, and I don't think that'll actually happen. So I do think the market's still getting ahead of itself slightly. I think rate cuts will happen next year. But that transitions into my next point that gold just hit an all-time high of $2,100, which is partially due to investors pricing in ahead of time rate cuts next year. And just like gold hitting a record high, Bitcoin is continuing its advance and now hit about 44,000 today. Just this Sunday, Bitcoin hit 40,000 for the first time. And since Sunday, Bitcoin is up an additional $4,000, partially due to investors pricing in rate cuts next year, which is similar to gold, because Bitcoin being a fixed supply asset, while there's monetary debasement and interest rate cuts happening, that bodes well for an asset like Bitcoin and gold. So investors are trying to get ahead of the liquidity cycle. Additionally, Bitcoin investors are also betting on increased odds of a Bitcoin spot ETF in the January 5th to January 10th window. We have more amendments filed from BlackRock meeting with the SEC, and now they're really just fine-tuning details about security and compliance. This fine-tuned details is something that, in my opinion, shows that the ETF is not necessarily a matter of if, but when. And I think by January, this will likely happen. So this is good news in terms of that. And there was also an article from Bloomberg that said in this Bitcoin hype cycle, it's possible that Bitcoin could hit $500,000. And honestly, that is true. If Bitcoin takes up the same market cap as gold and replaces gold in terms of gold's market cap, that's certainly possible. Do I think that's likely in this bull run? Honestly, I don't think so. I think 100,000 next year is more likely, maybe 150,000. But that 500,000 might be possible for the ultimate bull case scenario in this bull run. So we have to stay tuned. And then another reason why I don't think the market necessarily went much higher today, besides the market maybe getting a little bit of ahead of itself in these rate cuts, is that Moody's downgraded the credit rating for China due to decreased growth and problems with their housing sector. China's right now stimulating their economy due to the slowing growth, especially in the housing sector, and they're cutting interest rates on mortgages. And then Chinese real estate stocks are down about 80 to 85% from their highs. So the fact that Moody's downgraded the credit rating of China partially spooked the markets a little bit. But because we had pretty much a Goldilocks JOLTS job opening report, markets ended up really mixed today. with the Dow and S&P only slightly down and the NASDAQ up a little bit.